But let's take the market conversation forward. We have with us Sridhar Sivaram right here in the studios. Sridhar, so good to see you in person actually.
Yes,
not
good
on
to
the
be
Zoom
here
link.
after 2 years. So
Yeah, absolutely. But tell me, what's happened with the market all of a sudden? I can't say in the last 2 years, but just in the last month and a half, and suddenly after the RBI calling an out-of-turn move on the rates, it suddenly seemed to have, blown the lid.
yeah, so I think inflation is always a big worry for markets, and we are seeing the ugly head of inflation come back this year. This was broadly expected, but I think the pace at which inflation has come up post, I guess, February, I think that's been a surprise. And in my view, I think the inflation worry is more for the US markets. Yes, India will have its share of inflation. March was not a good number. We're going to see an ugly number for April also. But typically, India's inflation settles down in the second half of the year. But for a US market whose threshold is 2% and we are seeing an 8% inflation, I think the Fed is way behind the curve. And typically, during early part of the rate hike cycle, markets are normally very jittery, which is what we are seeing right now. So our broad view is 22 is a tough year. Protect capital. Don't be in stocks where you're not sure of your earnings. High growth and stocks at any price, those are to be avoided. And I don't think there's any hiding place, but that's broadly the view.
So is this a correction in an otherwise intact bull market, or would you say that the ongoings in the kind of macro landscape which has completely reversed in the last 2 or 3 odd months would actually make you sort of a little bit circumspect on whether or not the tide of the market overall has completely changed?
Yeah, so for the moment I would say that it's a correction in a bull market, but I'll keep a close watch on how global inflation plays out. Typically, it's a very sticky animal to tame, and if US is able to bring it down, we're seeing a lot of geopolitical issues also. Some of the reasons for the inflation, but if this inflation animal continues to be at a higher level, then maybe eventually the tide of market could change. But for the moment, our view is that this is just a broad correction in the market, and the bull market is intact. But maybe 22 is a tough year, and we have to tide over 22 with as less hurt in the portfolio as possible.
Okay, so 2022 is going to be a tough year. Good morning, this is Nantara in New Delhi. They always say that good news and good price don't come together. The news is far from good. Have the prices become good?
In some sectors, yes. Some segments, yes. Overall, the market's corrected, 6%, 5%. You look at emerging markets, they're down, I think, 17, 18%. Nasdaq is down 18%. So when you compare other large markets, it looks like India has been a very smart outperformer. So there's a chance that we could see some more correction if we were to follow some of the global trends. I would say that broadly we could see some more correction in the high growth segment. But otherwise, in some of the value segments, we still see the correction has been fairly. I would say now we are reaching, stages where one can start looking at investing in some of these segments.
So, can you tell us what you are doing with your portfolio? The last time we had you, you, for example, talked about going long on public sector banks. You weren't sounding very enthusiastic about private sector lenders. That entire theory of yours was that you wanted to gravitate towards the high value stocks.
Yeah, so I think that that theme is still intact as far as we are concerned. Public sector in general, we've been long because there's been a huge value erosion as far as public sector stocks have been concerned. And I think two things have changed there as far as public sector is concerned. One, the intention of the government to privatize. But having said that, they haven't been really successful in privatizing any of the large PSUs. But we are still hopeful given the intention of the government. And if one of the large PSUs get privatized, we think the entire sector could re-rate. Just keep in mind that the entire public sector market cap today is around 14-15 lakh crores. That's less than what Reliance is, and the entire banking PSU is less than, say, about 7 or 8 lakh crores, which is less than what HDFC Bank is. So I think that's the extent of undervaluation of some of these PSUs. So we're selective in what we are buying there, but we think that given the macro environment that we are facing, some of these could give outsized return or at least protect capital in the near term. We are still long PSUs both on the banking side as well as the non-banking side.
Sridhar, hi. Speaking of being very selective, I understand that that's the approach that you have when it comes to IT as well, because by and large you're underweight IT, but it's very stock specific.
Yes.
If I may, would that also include some new age recent listings as well, mid cap names? Would you be very stock specific when it comes to that, or is that a complete no?
So we broadly avoided the new listings. I mean, I've lived through the 2000 tech boom bust. And we all made our mistakes paying 50 times revenue for even companies like Infosys and Wipro. They were very good companies, but we paid the wrong price. Eventually it took 7-8 years for those companies to come back to the 2000 highs. In fact, if you look at Z, even today after more than 20 years, it's still below its 2000 high. So I still believe that paying 50 times revenue for some of these new age companies, it will be very difficult to make money. Yes, some of them will eventually emerge as winners, but I would rather wait on the sideline and see who the winners are rather than trying to bet on each and every of those new age companies. And the pricing looks totally out of sync as far as I mean, there's still multiple times revenue. So, I mean, I would still question why they would trade at 35-40,000 crore market cap with revenues which is 1/10 of their market cap. So, I mean, this is
You've
our
given
view.
us a fair hint of which
No,
one you were
this is
talking
our
about.
view. I mean, there are different investors, there are
yeah.
different ways of achieving your respective goals.
Yeah.
Given our view of 22, which is that it's a tough year, these type of investments where you really don't have any earnings support, I mean, even after, say, a correction of 50% for some of these stocks, you could still argue that they look very expensive by any matrix.
Yeah.
Apart from the fact that if I extrapolate it for 10 years, then possibly yes. But I can't see one quarter in this environment. How do I extrapolate for 10 years? So
besides PSUs, where is that ripe opportunity that you're spotting right now?
No, so I think
Straight to the
financials
point.
look. No, I think financials do look good. I mean, if you look at even private sector banks, so our bias is more towards banks in the financial segment versus NBFC, HFCs, which we've been bearish for a very long time, and I still maintain that.
What about the new mega merged combined entity?
I will not comment on that, but they look very interesting. As far as private sector banks are concerned, I think there is a huge opportunity. Typically, you will see some correction, some valuation, adjustments that we see. But over a long period of time, you look at them, they've all given you, mid-teens returns over the last 5 years, 10 years, whichever period you want to pick. So I would still bet on some of those. I would say we are still very bullish on commodities. I mean, we still think that there has been massive underinvestment in commodities in the last 5 to 6 years, thanks to ESG. I can give you an anecdote that we were on a conversation with an Indonesian coal company. This was about 6 months back, even before the coal shortage that we are seeing right now. And they were highlighting that they don't even get bank funding for a new coal mine, let alone equity. So that is the extent of ESG concern that there is no investments going into some of these segments. This will eventually come to bite us because the new energy is not catching up at the same pace as we need. Keep in mind that if aviation picks up globally post-COVID, I mean, we are going to see massive spurt in demand. I don't see crude coming back below 100 in a hurry. Keep in mind that pre-Ukraine itself, we were at 80. So we forget that we were already at 80 pre all those Ukraine issues. So the pinch of the demand for crude and the underinvestment was already showing. Our view is same for non-ferrous, that non-ferrous also has seen the same issue. One, that a lot of non-ferrous gets used for EVs, and the fact that we've had the same argument that underinvestment. So I think those are the issues that we are facing. So we still remain bullish. Yes, there is the risk of some of these commodity stocks will come off, but we think they'll surprise on the upside as far as earnings is concerned. So there are pockets where you can still look
Hunt.
at. Yeah,
Yeah.
exactly.
And you travel very extensively, and you had earlier flagged off, yes, there were worries when it came to the pandemic. Things have eased so considerably. You're in the studios now
Yes.
after such a long time. So does that give you a little more confidence when it comes to the earnings trajectory?
So actually, I would say no, because there is a slowdown in the rural segment. I do travel a lot. I think in the last 6 months, I would have traveled 5 to 6 different states. And there is a distinct slowdown as far as rural consumption is concerned. And I would say that companies are not able to pass on the increase that is required to take care of the commodity inflation. You can see that in many companies, be it on the FMCG side, you look at commentary from Unilever or any of the other larger companies, the volume growths are really anemic, I would say 3-4% volume growth for an FMCG company. Look at two-wheeler companies and look at the margin profile. Even for a good company, they are not able to pass on the margin. I think eventually this will settle down, but in the short term, we would see some impact on earnings. Top line may come back because we've had multiple challenges even for last quarter. The first few months were Omicron issues and there were too many disruptions. So I think this quarter will be a better quarter to judge. Maybe the top line will come, but I think margin will have to have a reset because the earnings estimates look very aggressive right now. So we may have some reset, but the markets also had a reset. So I guess there will be some adjustments that we will see, but it's not going to be easy, which is why I said 22 has too many challenges, and we'll see how this pans out.
So Sridhar, just taking forward that point, the expectation was, let's say at least when the calendar year 2022 goes, that this will be the year where we will see margin normalization. I think that's very, very unlikely. We've not seen that many earning downgrades, right? We are still in the thick of earnings season. Most of the numbers are out. So what should our viewers brace themselves for? Earning downgrades coming in the next couple of weeks?
Yeah, we are already seeing some early signs of earnings downgrade, but we'll see a larger part of the earnings downgrade in the next 2 quarters as companies adjust for the higher commodity prices. Keep in mind that most companies have earlier commodity which they have already purchased in the past because nobody buys just in time. There is always some inventory that they keep. So I would assume that some of the earnings, especially the EBITDA level adjustments will happen in the coming 2 quarters. If demand were to surprise very strongly, then it's possible that companies could readjust and bring the earnings back to normalization. I would doubt if that happens at a fast pace. It would happen at a very gradual pace. So there could be some hit to earnings. So I would broadly feel that the earnings numbers as I see right now for FY23 still slightly on the higher side. We would see hit on the consumption side mostly. Commodities and financials may still outperform or surprise on the upside. That's how I would put it.
Now, when you talk about 2022 being a tough year, where you also have to be selective, you have to protect your cash, can I ask you that is this a time to take more cash off the table?
We've already seen a large part of correction. If somebody had done this just before 22, it would have been a good option. Keep in mind that we had this view entering into 22 and the markets were behaving extremely well for the first 4-5 months. And we all often questioned our wisdom whether this is the right strategy to increase our cash and be selective. But given how inflation has played out after that, which I think is the biggest villain out here, I don't see that getting tamed in a hurry, and we'll see more surprises as the year goes by. So we are talking of Fed increase of another 100 to 125 basis points in the next 2 months. We are talking of possibly 50 to 75 basis points of rate hike for India in the next 2-3 months. April inflation number for India could be 7.5 or north of that. So we're going to see very ugly numbers and commentary from central banks. These are not great news for markets in general. Some bit is already priced in, and I don't know how much more is yet to be priced in. So, given all this, I would still be very cautious whether somebody wants to be more in cash. It's an individual call. Each individual will have to take a call on this. But somebody who's investing in the markets through a SIP or a retail investor, I would just say that that's why SIPs are made, that you keep investing every month, so you get an average out based on how the markets move. It's never linear, so I wouldn't advise same for a retail investor, but an institutional investor or a savvy investor could always take a call.
Sridhar, enough about markets. Tell us, where's the next trip? How many tigers did you spot?
So I am just back from Bandhavgarh, where we
Wow.
got about 15 or 16 different tigers. We spotted a tiger making a kill, which is very rare to see. So it was quite a fruitful trip, which is why I said I went into the rural area and saw what was happening. So actually, the good part is that the government's delivery program is very good. You look at some of the, Pradhan Mantri Gram Sadak Yojana, and speaking to people at the extreme rural level on the direct transfers, the Manrega program. I think the improvement in the direct transfers is so massive that the leakage has drastically reduced. And a lot of these programs are actually for the benefit of people in that area. Earlier we used to think that Manrega is just a waste of money, but a lot of them, they're geo-tagged and you're supposed to upload whatever work you're doing. The money gets transferred into your account within 7 days. There's a proper method in the madness. So quite eye-opener when you travel to rural India, that both state level and at the center level, the improvement on the social level delivery program has gone up so much that I think it's a good thing. Only when you step out of
you see.
the cities,
The bubble that we live in.
Yeah, cities, you realize that there is
India
a lot
has
of
made
there's a lot of
progress.
activity happening at the interior levels.
Sure.
Sridhar, if you were blown by Bandhavgarh, I'm going to give you one tip, and I'm telling you on national television, you will be blown by. If you can go get a permission from the government, you have to go to a bureaucrat, a minister, or a judge or someone to stay in the government forest reserve in Dikala, which is way inside Corbett. And trust me, when you will see the kind of progress there, people who manage to go, they're seeing tigers bathe in the water. The kill is not so mythical or such a rare sighting right now.
I go every
If
year.
you can go, you
I
must.
go every year twice. I have already done that in January, where we got tiger on top of
To
a tree.
Tikala?
Yes, every
Dude,
year
if
I
you
go
to
twice.
Tikala,
Twice I go.
if you go to Tikala twice a year, Sridhar, you have to help me get permission for inside that government guest house. You
Yes,
have to
call
help
me
get
after the
that.
show.
Nayantara, you asked the wrong person. Like when you started, I was like, he must have already been. But Sridhar, great to have you in the studios as always, and we'll chat again soon.
Thank you very much.